So life has felt a bit like this lately, hasn't it? A long, dark road, no end in sight, occasional excitement when you go out to get your morning takeaway coffee or maybe go to the supermarket. That's a lot like it was to be in agri food tech 10 years ago. My colleague Rob famously called it a backwater of venture capital. The investments were few and far between. There were just one or two dedicated venture capital firms focused on the industry. Food tech was barely a coined term back then. Agriculture was named the least digitized industry in the world. And that is right around the time when I started focusing on agriculture in late 2013. Agtech had had its first big exit. Monsanto had acquired Climate Corporation for $1 billion. So it did have that. But other than that, most of my coverage was for farmland funds and the occasional private equity deal. Yet moving over from writing about equities and bonds and institutional investment in Asia, I immediately saw the appeal. It was a far more tangible asset class than the other markets I've been covering. And this was feed the world stuff. So fast forward to today, and it's clear that other people share my view. This image is much more appropriate for today in agri-food tech. Obviously, a lot of us are not able to do this in person today, but when you look at what this industry is, we're all having this massive party virtually. There are robots on farms. We're growing food inside of grocery stores and underground. We're eating real meat made in a lab, or more realistically, a fermenter, but you get the point. We also have publicly listed companies in the plant-based space. Beyond Meat listed last year. Vertical farming companies are public companies like AeroFarms will soon be. Gene editing companies. Food delivery is everywhere. If you don't have your coffee with a dairy-free alternative, I don't know what you're doing. Although maybe saying that to your New Zealand audience is a little bit controversial. The thesis has shifted a bit. So no longer is the sole focus of this industry on producing more with less for a growing population. But innovators, investors are thinking really carefully about how they're creating food, what they're producing with human and planetary health in mind. And overall, more and more people are coming to the agri-food tech party, and it's very exciting. In fact, 2020 was by far and away the biggest year ever for investment in food tech, ag tech. A lot of that growth was down to mature growth stage deals, so larger and larger deals, because this industry is maturing. So some of those brands that you all know and perhaps love are now late stage ventures, raising really large rounds and pushing totals up. So some of those include Beyond Meat, Impossible Foods, Eat Just, AeroFarms, Climate Corporation, Farmers Edge, Conservice, Ginkgo Bioworks, Pivot Bio. They were all founded in 2010 or before. So they're all over 10 years old. That 2015 year really was a year that was a breakout year that put food tech and ag tech on the map. And two areas that particularly raised a lot of money were food delivery and farm software, particularly drones, remote sensing. This prospect and potential of transferring technology from other industries into agriculture and food for the first time was so exciting. And in theory, relatively straightforward, right? So take drones. We can give farmers a view of their fields they've never seen before. In practice, farmers were drowning with so-called pretty pictures of their farm that could only tell them what had already happened when it was too late. It soon became apparent that the ultimate goal and value-added proposition was to alert farmers to problems on their field before they became unsolvable, while they still had time to act. So we started to see the complicated nuance of agriculture, an industry based on organic goods, natural resources, weather, became really apparent, and many innovators were not prepared for that. So investment in drones dropped off. And actually, a lot of drone companies pivoted away from agriculture into less complicated industries like construction, mining, and urban planning. Food delivery, which also had this huge boom in investment in 2015, and of course today is ubiquitous, particularly in a post-pandemic world. But it also went through a rough ride. Again, it was more complicated than many people thought. The unit economics were super tough. Consumers didn't necessarily want differentiated offerings. So there were a lot of Me Too products out there. consumers just really wanted the largest selection possible and quick delivery. Well, the logistics around that are super hard and it comes at a cost. And so there were also a lot of failures in food delivery after 2015 too. So if we look here at the Gartner hype cycle, I would say that 2015 was the peak of inflated expectations for drones and food delivery. And now they're probably moving into the plateau of productivity, but with some adjustments. So for drones with remote sensing, it's highly unlikely you're going to see a standalone drone product for this. They're now part of a broader analytics offering alongside various other data sources like satellite imagery, soil data, weather data, and so on. A newer development with drones that was more of a distant hope back in 2015 is using them for tasks on the farm like spraying and harvesting. In Asia, where getting large equipment into the field is harder and less relevant, crop spraying drones are revolutionary. And we're seeing particular strides in China. Just this week, there was a $30 million deal for a Chinese agricultural drone, crop spraying drone, backed by some big government investors. There are still some challenges around regulation and the amount of product a drone can carry, but it's improving all the time. Key for innovators to remember is that farmers don't want to be messing around too much with robots, needing to put them back onto charge all the time, needing to keep them in line of sight. They need a certain amount of autonomy. Food delivery, while as I mentioned, obviously is everywhere, still actually struggles from a sustainable business model. You only need to look at the IPO of Deliveroo recently over here in the UK, where investors balked at the company's treatment of its drivers when they were thinking about their ESG metrics. And that shaved $1 billion off its valuation. No doubt its investors still performed very well from the IPO though. So moving on to 2016, one category that's always had column inches and attention far greater than its actual impact has been vertical farming. I remember back in 2016, I knew any article that we wrote about vertical farming and indoor ag would be the best read of the week, just guaranteed. It captured people's imaginations. It's super nerdy, it's kind of sci-fi. But in reality, I just read this week and I was really quite surprised. Vertical farming is the equivalent of just 30 hectares of farmland globally. So if you compare that to outdoor cultivation, where there's 50 million hectares cultivated, and in greenhouses, there's 500,000 hectares, it's still super, super small. Significant challenges still remain today, mainly around costs and energy efficiency. Having said this, I have noticed a turning point in recent months, which is quite exciting. Indoor farms are now growing new crops. So, there's been a bit of a fatigue around the fact that it's always been leafy greens. We're seeing a lot more vertical farms doing more research into different crops. Strawberries and tomatoes are increasingly common, but they're also researching into breeding, how they can breed outdoor crops to be grown inside. We're also seeing the technology become more sophisticated and automated. One of our portfolio companies called Intelligent Growth Solutions, they have great innovation around electricity and making that more efficient. And they're growing super fast. IGS, again, for instance, has 26 grow systems in place today, but they're expecting to triple that by the end of the year. Bowery, a New York-based plant factory vertical farm, has just built a farm 100 times the size of its first one. So this is not theoretical anymore. Vertical farming is being included in policy directives of governments such as the UK, Singapore, Middle East. And it's set to grow to about $20 billion in about 5 to 6 years' time. So if you think about the hype cycle again, we're probably on the slope of enlightenment. It's probably a very shallow slope, but it's an upward slope nonetheless. Moving on to 2017 and 2018, I think a big buzzword of those years was blockchain, which was always quite hard for me to understand why you would need blockchain when there was still so much more of the food supply chain to be digitized before then. Farmers were or still are using notepads. Drivers in haulage trucks are using notepads hanging in the cab. And I think this quote from Olam, one of the largest supply chain companies in the world, really, sums it up. We have not seen a tangible, scalable use case that could give us significant benefits for adopting blockchain. That was in 2018. The situation might be different now, but I will say that we did notice quite a big drop-off in startups focusing on that area after that initial buzz. So what about the last couple of years and today? So this slide could give you a hint. What do all these celebrities have in common? They've all invested in alternative protein startups. We can't have a talk about food tech and ag tech without bringing up alternative protein. Excitement here is huge, it's fever pitch. And it is possible that we might be heading for a bubble. Data has shown that investment in alt meats in 2020 reached a record high of 3 billion. It's increased its market share substantially across food tech and ag tech. 3% increase in market share just between 2019 and 2020. And the Boston Consulting Group has predicted that alt meat could comprise 11% of the protein market by 2035. Similarly, Food Dive has reported that self-identified meat eaters dropped from 85% in 2019 to 71% in 2020. Impossible Foods was only in 150 grocery stores last February and is now in 17,000. So that's a 100-fold increase. That can be attributed to some of the supply chain disruptions in the meat supply chain during COVID and also rapidly expanding production capacity. But if the success of the industry is against its impact on meat consumption, it's not doing quite as well. Sales of meat were still up 19.2% in the past year, including beef from Brazil, which is a high offender when it comes down to chopping down forests for ranching. Big meat has yet to commit to reducing livestock production, and there are some significant challenges ahead. Some of those for startups. So some of those include competition from some of the big meat companies. So the big meat companies are putting a lot of money into creating copycat plant-based products. Some of them even have very similar names. And if you think about their supply chain and the amount of supply of the raw ingredients, which can be a challenge, getting supply of pea protein has certainly been a challenge for some startups. That could be quite dangerous competition for some entrepreneurs. Scalability, supply, the environmental footprint of alternatives. There's an assumption that it is more environmentally friendly, and in most cases it absolutely is. But I read recently this week that air transported fruit and vegetables can create more greenhouse gas emissions per kilogram than poultry, for example. So something for people to be aware of. Regulation and consumer acceptance are still unknowns, particularly when it comes to the use of genetic engineering for some of these products and the health profile of them as well. I think that there's been a little bit of consumer backlash around the amount of processing in some of these products and whether they're nutritionally equivalent to their animal-based counterparts. And also more philosophically, there remains a question of whether expanded activity and investment in this industry is reshaping a problematic food system or just building up a parallel one. So how do you weather that potential dip into the trough of disillusionment? I'm not an economist, but I can tell you how we have an investment fund focused on alternative proteins at Agfunder and how they think about it. And I think this could be translated into other categories as well, not just alternative proteins. So diversity is key. They're going to invest in about 15 to 20 investments in a $20 million fund. They're going to surround themselves with the best investors. So sometimes when categories get a bit more hypey, a bit more bubbly, you can have slightly rude, but dumb money comes in, less educated money in the industry. So you ensure that you do deep due diligence on the companies, which some of these less expert VCs cannot do. You ensure that the companies you invest in have commercial acumen to get to market fast. When there's all this competition going on, you want them to be making revenues as soon as possible. And you ensure that these companies are future proofing, thinking about their customers of the future, imagining millennials as parents. So what's next? What are some of the next areas of excitement? Food as medicine is an area that I find really exciting. If you think about in the US, 88% of the population is metabolically unhealthy. So that means they have high blood pressure, high cholesterol, diabetes or pre-diabetes. That's 88%. So they are all of them thinking in today's context at high risk of complications from COVID-19 compared to the 12% who are deemed metabolically healthy. Now, we all know that kale, spinach, and the like are good for us. There are studies showing that people in diets that are low in plants, fruits, nuts, and seeds are 3 times more likely to die prematurely than those with diets that are high in those things. But what we don't really know is how or why. One of our portfolio companies is delving into that and researching how the presence of certain compounds called phytonutrients can be beneficial to human health. You've got companies researching medicinal plants to use those in all proteins. You've got others delivering meals that are exactly attuned to your health needs and goals and ailments. And so then that gets into personalization, which is another trend that's been on the horizon for a while, but looks set to accelerate more now as research into the gut microbiome improves and nutrition science slowly but steadily improves. A company that's interesting in personalization is called Project Well. And then last but not least, the buzzword of 2021 is probably carbon markets and regenerative agriculture. So regenerative agriculture was something I've actually covered back in 2014 when I was writing more about sort of farmland investment. And back then there was already a dedicated group of practitioners and investors, but it was a very small universe. And I remember writing about it and really wanting it to, have this like huge following of readers. Unfortunately, not so. It wasn't quite the same as writing about drones back then. But skip forward to 2019, I think is where I suddenly saw this change. And regenerative agriculture became this phrase that people were using more and more. Food brands have started to use it as well. It's not just people within our universe. This is becoming a phrase used by consumers. And articles that we wrote about it were going viral, finally. Startups started to introduce it into their marketing. And it now goes hand in hand with the discussion around carbon markets. So today I'm seeing lots of companies, on the farm software side are pivoting slightly to provide carbon measurement and incentivization technologies. And the potential for farmland to sequester carbon from the atmosphere is really great. And I'm sure you're going to hear more about this in the next couple of days. One word of caution, as it seems that this might be creating a bit of a bubble, is that there are still quite a few unknowns. And there are many differences that can make the modeling inaccurate, complex, and maybe unrealistic. I saw a quote from a researcher from Wageningen in the Netherlands, and he was saying that he is very worried that the amounts that people are saying that of carbon that could be sequestered by farming are vastly overestimated. Carbon capture can also be temporary. So while you might capture it one year, it could get released through practices later on. So for this reason, a lot of research groups, such as the World Resources Institute, have completely left out the potential for carbon sequestration when they've done their forecasts for what carbon emissions are going to look like in the coming years. I think that's understandable. I think it's a shame to write it off so quickly. There's so much focus today on the negatives of farming and not really enough focus on where the industry is doing things right. So I think I would hope, agriculture is not going anywhere soon. Let's celebrate and encourage best practices where we see them and think creatively about how to fix the food system's impact on the planet. And while, I think we might be headed for a bit of a bubble in the carbon sphere for, similar reasons to drones, really, the understanding of this very complex industry, how plants and soil sequester and store carbon, in different soil types, different climates, it still, seems a bit early on that front. But the good news, and ever the optimist, and where I'm going to end, is that agri-food tech now has this groundswell of investors, right? It's a much larger investor base than it used to be. They have already come up the complex learning curve and will ask the right questions of entrepreneurs in this space. So that's my whistle-stop tour. I did mention some key areas of innovation, such as biotechnology, gene editing, microbial discovery. I didn't delve into robotics as much, which really is starting to happen now. They're out on the farm. But I hope that was a good snapshot.